Getting a HELOC with a low credit score is possible. Generally, borrowers like you have to have a score of around 620 or higher, but you can do it with a score around 600, and I'll get onto that in a minute. When it comes to using the funds from a HELOC, you have a lot of freedom. You can use it to do your house up, consolidate your debts, or manage mortgage finances. Understanding how a HELOC works is pretty straightforward. It's similar to a credit card, but based on the equity in your house. So for example, if your home's valued at 250 grand and you owe 100 grand, then you've got 150 grand in equity. Lenders will look at various factors, including your home's value, its condition, and any other outstanding debts when considering your HELOC application. You can draw from this line of credit as needed, and initially, you only typically pay interest on the amount that you use. If you're considering checking your credit score, there are many services like ClearScore that will give you in-depth information for free, and your bank might offer this too. It's important to make sure that your credit file is accurate, as this could impact your score. If you find any mistakes, you need to contact the credit agency to remove them. So how do you get a HELOC with a lower credit score? You may be able to get one if your credit score is around 600 if you have a low debt-to-income ratio. This compares the amount of debt that you have to your overall income. Lenders use this to assess your ability to manage monthly payments and repay borrowed money. To calculate your DTI ratio, you divide your total monthly debt payments by your gross monthly income. That's basically your income before taxes and other deductions. The result is expressed as a percentage. So for example, if your monthly debts like your mortgage, car loan and credit card payments total £1,000 and your gross monthly income is £3,000, then your DTI ratio would be 33.3%, which is £1,000 divided by £3,000. Lenders prefer a DTI ratio that's 36% or less, although this can vary depending on the lender and the type of loan. If your DTI ratio is higher than you want it to be, you can improve it by increasing your income, paying off existing debts, or doing both. This improvement can enhance your borrowing power and terms in the future. If your credit's quite low, extracting equity from your house is possible, but may result in higher interest rates and potentially additional fees, depending on your lender and situation. There are advantages and disadvantages of getting a HELOC. On the upside, a HELOC can be an effective way to access cash without selling assets. Usually has lower interest rates than loans and allows you to borrow as needed and provides flexibility in how you use the money. The downsides of a HELOC include potential increases in interest rates if not fixed, the risk of overspending, the possibility of losing your home if you default on payments, a set draw period, and a more involved application process than standard loans. Before committing to a HELOC deal, it's important to find out as much as you can get and how much it'll cost without hurting your credit score. I've partnered with a company who can provide a free quote so that you can start to understand what's available to you. Fill out the form below for a free quote. I'll leave it just under this video for you. And if you use this link, you'll be supporting Thrifty Family. So thanks.